All right, what's up, traders? This is another Reacts video. I found a strategy on here. It's got quite a lot of views. It's a pretty big channel. I had actually never heard of it before, the trading channel. We are going to react to this perfect best beginner Forex strategy. It's specifically designed for beginners, so let's see if it's actually a good beginner strategy, or if we can poke any holes in it, see if the logic of the strategy makes any sense or not, and then move on from there. As always, guys, the link for this video is going to be in the description. Let's get it started here.
If tested correctly, if you do all the steps right, it won't only give you an edge over the market, but as you are now, if you are a beginner or if you're someone who's still struggling in the Forex market, then that struggle is due to a few factors. One of those being you may not understand the foundations of trading, which would be structure and trend. This strategy will help you practice that beyond belief. It actually has a lot to do with structure and trend. That's what we're going to talk about after the intro and disclaimer. It won't only help you with that, it'll help you with patience and with discipline as well. And those are some of the most important parts, especially as a beginner, to actually start to understand. So if you're interested in this strategy, if you're interested in all of that,
Okay, so he's making a lot of big claims right off the bat. He's saying that this specific strategy is going to help you with psychological issues, which any strategy whatsoever, it doesn't matter what strategy you're trading, has nothing to do with your own psychology. That's for you to handle. The strategy isn't going to help you with that. But I am intrigued. He seems to be talking about that this might be a price action based strategy. So I do like those a lot. So let's kind of dive into it.
Make sure you are subscribed by clicking the button down below the video to the right hand side.
And just remind you guys, like also subscribe here.
Every week. Welcome back, guys. So we are about to jump into what I consider to be the perfect beginner Forex strategy. But first off, let's talk a little bit about what's important in a strategy in general. What's the main focus? The main point of having a strategy or a rule set that we follow. The main focus is that rule set gives us what we call an edge or advantage over the market. We need this to
So right off the bat, I did notice he is said the second time here now that this strategy will in fact have an edge over the market. An edge over the market is basically implying that there is a slight probability advantage or money advantage in your favor, similar to how a casino will work. So he does say that this is profitable, essentially. That's what he means.
To give us an edge because of the scenario I'm going to tell you right now. At this point, you've probably heard the analogy from trading to a casino, right? Like casinos, what do? Every single day, a person walks
Look at this. He's just describing it the exact same way. Okay, I might like this guy.
in a casino, and they place bets on certain games. The casino may not win every single day. There might be days that the casino loses money, but overall, the casino has an advantage. Over the course of 12 months, the casino is going to make money based on the advantage it has. So your job is to be the casino, not the guy walking in to play games. Trading is not a game. You don't want to be the guy. You want to be the casino, and you want to make sure you have, let's say, a 55.
This is stuff I talk about all the time in my videos here, guys. It's all about creating that slight edge, and you're basically becoming a casino. I literally tell my friends when they ask me what I do is I basically say I gamble for a living, but I'm not the gambler, I'm the casino.
With 60% chance to win. With a 1-to-1 risk reward, that would be considered an advantage. Or maybe you have a 2-to-1 risk reward and you're winning 50% of your trades. That is an advantage. Those are a couple of the ways we can actually get an advantage over the market. So every time we're testing or trying to trade a strategy, we want to make sure that that strategy comes with an edge over the market. Now, one of the only ways I have personally ever found to figure out if a strategy has an edge over the market without risking live money, because that's not what we want to do at first. We don't want to just go out here and start throwing shit at the wall and hoping it sticks. We don't want to go out here and just start wasting our hard-earned money. That's not what trading's about. The best way to do this is to do something called backtesting.
So far, this guy keeps talking very, very similarly to me. I'm really liking his style so far. I've never actually seen this guy before, and I have no idea why, because he's got like 500,000 subs. But he's talking in terms of risk reward, R. He's talking about backtesting. He's talking about edge as a casino. It's all very, very similar.
So in the process of backtesting, you're looking through historical data to find the strategy or the rule set that you have created. In this case, the one I'm going to give you here, the perfect beginner trading strategy. You're going to look through historical data to see, for one, what currency pairs it works best on. Let's all be honest here. I'm sure you've heard the phrase that every currency pair has a different personality, and it's absolutely true. There are certain currency pairs that trend really well. For instance, yen pairs tend to trend really well. So if we're trading a trend continuation strategy,
I also noticed if you're looking for a trend trading strategy, you want to look for more minor pairs, things with less volume, as their spreads are wider, so they're more likely to trend for longer periods of time. There's less manipulation in those markets. Ideally, I like to trade the ones with high volume because there's a lot more manipulation, and I trade manipulation.
we want to test yen pairs first and see which ones we come up with the best results on, just as a very short example. So we're testing for that, and also to help us figure out what we have in terms of a maximum drawdown to help us optimize the portfolio of pairs we're going to use. If you're brand new to trading, a lot of this is probably going over your head, but we're going to discuss it again after you learn the strategy. Now, let's dive into the technical aspect of the actual strategy you're going to learn today. So, in today's video, I'm going to teach you a strategy that's going to help you with understanding structure and trend, and also entry reasons, and it'll help you understand the structure of a strategy. Not only that, it will help you understand the structure of creating a trading plan around a strategy. The strategy we're going to talk about today, though, has two different ways to enter this specific strategy. So first off, let's talk about the trend continuation version of this strategy. It's going to be a very simple strategy for those of you who already understand trend, semi-difficult strategy for those of you who don't understand what trend is yet. So a trending...
If you guys haven't watched my trend trading using price action video series, make sure you look that up. It's just price action based trend trading. It's incredibly important if you want to actually learn how to find the trend using just the candlesticks in a very set rule system.
Market is going to be a market that makes at least what I call a 1, 2, 3 move. 1 there, 2 there, 3 breaking below the previous lows. This outside return or pullback must have at least 2 green candles. Okay, if we have a push down that's impulsive, we have 2 green candles pulling back, and a break below this structure level, I consider that a trend, a trending move. So if we have a trending move, our trend continuation play, and as
So I don't like the way he's defining trend, because this could literally be anywhere on the charts. We have trends literally everywhere, and why the hell do we need 2 green candles? That's completely arbitrary. What about 1 massive green candle? What about 3 candles? It doesn't make any sense that he would need 2 green candles. The way he's defining trend also, what is the turning point? Well, essentially the turning point would be when you start making new trends in the opposite direction. So when you start breaking new highs, but that's not actually the new trend, because let's actually look up. Let's actually draw this right here. See, this is the problem with what he's saying. He's saying basically we have that, right? So when it breaks back down, then that's a trend, right? So what he's saying then is, now if we break this high right here, now we're in an uptrend, right? And that's just not the case, because this is the exact opposite. So what we need to look for when we're determining trend is actually the reversal points of trend. All he said is higher highs, or all he said is lower lows and lower highs, right? That's all he said. 2 consecutive lower highs and 2 consecutive lower lows, and that's just how he's confirming the trend. But what's important is we know when it shifts, right? So now what he said is that this is a new uptrend, which is completely wrong, because we're still in this leg, right? We're still in this downtrend leg, and it hasn't broken this level here. So what you have to do is you actually have to be watching the levels that are bringing us into these lows, right? So this is the key point, right? And previously this was the key point, right? Hopefully this makes sense. Make sure you guys watch my trend trading videos there if you want to learn more about that, because this could simply reject off of this supply and then break down even further, and then his valuation of the new uptrend here is completely wrong, right? This is absolutely wrong. But that's my opinion. I think he's going to get baited a lot if he is using that method.
I was saying earlier, this strategy is going to teach you patience, because at no point, if you're using this strategy or when you test this strategy, will you trade unless these circumstances are exactly met. The only time you place a trade, whenever you're testing.
I really do like this logic. That's what you should do about every strategy, and I think that's why he said originally on that this strategy is going to help you with your own psychology. It's simply just he's setting a very strict rule system, which can be done on any strategy, and that's what I really suggest for whatever you guys are doing. Make it extremely strict and stick to it.
This. The only time you test to place a trade, the only time I would place a trade based on this strategy is once the market gets back up to only this previous low. Okay? We're going to do this on a chart to make it easier to understand in a minute, but only...
Right, so my first thought is that he's doing a SR flip trading strategy here, which is very retail trader based, and not very smart in my opinion. You're getting really poor entries, and you're just trend trading. You're just trying to follow that trend, and actually he's got a poor definition of what trend is.
At the point that the market makes it back up to that previous low, that is the only time you look for a trade. No other time are you looking for a trade when it comes to trend continuation. So this is going to be one of the perfect ways to start trading as a beginner. And one thing I forgot to mention, only do this on a daily chart. For now, if you're just starting out, or even if you're someone who's not profitable.
Okay, that's irrelevant.
A lot of us come into the Forex market, me included, when I first started. A lot of us come into the Forex market expecting to be able to quit our jobs in a month and be trading from a large enough account to where we don't have to work anymore and we can provide for ourselves or our families. Unfortunately, especially if you're here, hopefully you've already figured this out. That's not what normally happens. Don't be afraid to be patient, not only in your trades, but in your journey to becoming profitable. Trading on the daily chart will keep you from making some of the detrimental mistakes that you could be making in a day trading account that would cause you to bleed your account dry. So trade on a daily chart. Give yourself time. If you have a full-time job, trading on a daily chart is not going to be super hard, especially in the way we're going to enter the market. If you decide to test and trade this, that's your decision, not mine. I'm not a financial advisor. I cannot tell you how to spend your money. I don't know your financial situation, but this is me suggesting something that I've done in the past that helped me on my path to profitable trading. Make your own decision, but if it were me, the way I would enter such strategy, a strategy like this, is once we hit this level, let's say we have a candle that touches that level, I would enter in two ways. One, a shooting star candle, hammer, if we flip this to bullish, and we'll do an example of that in a second, or an engulfing candle at this area after the touch.
Right, so he's essentially just looking for a momentum shift as we're hitting the SR flip level. And I think it can work in the sense that you're going to be able to catch small moves, but you're not really catching the major move. And usually this is where retail traders will be entering. And he's just waiting for confirmation that other retail traders are entering. But then it's going to move down, and then most likely it's actually going to come back to a level that would normally stop you out. So I'm not a huge fan of this.
There's no other entry. That's it. This is why it's so important to be patient. What you're going to do is go through historical data, and you're going to test when you see a 1, 2, 3 trend move, like what's on the screen in front of you, and then you see a shooting star candle, and test them separately, and then you place an entry here. Let's say your stop loss is 1 ATR. ATR is an indicator you can find on TradingView. That's the platform I use. ATR is one of the very first indicators that pops up once you click the indicator button on TradingView. So you use.
He seems like he doesn't exactly know what ATR is. It's average true range. So it's the average range in which that certain currency pair is moving, so that you can know exactly how far you should be putting your stop loss. I don't like it because it doesn't base anything off of structure. It's just the volatility essentially of how it works, how the pair trades.
Use an ATR indicator to figure out the stop loss. Let's say it's above this high by 1 ATR. You put your target either back down at previous structure or a 1-to-1 risk reward. Totally up to you how you do targets. Personally, I set mine at a 1-to-1 risk reward. I do multiple targets, but if you're a beginner, it's not how you need to take targets. Either do a 1-to-1 risk reward or back at previous structure for trend continuation. And don't let that limit you once you get good at this part of it. Again, we're working towards you being able to build an even better strategy. This is a simple version that's easy for you to accomplish every day because you're getting off work.
All right, so I do understand what he's saying here, where it's actually a very simple strategy for a beginner, and I think this is a good starting point for a beginner. I'm thinking that it's going to be a lot better if you're greedier and you look for a deeper retrace and you learn the supply and demand levels, and that's where you're going to be looking for untested supply and demand levels. Is generally where you're going to want to be looking for these reversals, and that's going to provide so much better value for you than simply using the SR flip level.
And the daily candle closes at 5 p.m. Eastern, and you can actually look at that candle and say, was it a shooting star candle? Did it touch my most previous level of structure? Can I place this trade? Then you can set your stop loss however you want to, and your target however you want to. These are just examples. But in this case, you would take this and test this exact situation through historical data, as far back as you can go, and see how many times over the lifetime of as far as you can go back did this work out as a winning trade. If you come up with 55 to a 60% chance of winning with a 1-to-1 or above risk reward, then you have an obvious edge or advantage over the market, which is exactly what we're trying to accomplish. So to go over this once more, we'll do a bullish version this time, just to make the trend continuation section of this extremely understandable so that you get it completely. And we'll go to the chart directly after this to engrave it even more in your brain. Looking for an impulsive move. A pullback. This pullback has at least 2 candles. We're looking for the market to break above that high before the pullback. After the market breaks above the high before the pullback, we're waiting for the market to pull back again, touch that high. Once we touch that high, we have 2 ways we can enter. Either a hammer candle, because we're bullish now, not a shooting star, a hammer candle, or an engulfing candle. Those are the only 2 ways that...
What I would actually do as a more advanced trader, if you happen to be a more advanced trader, look at the lower time frame, look at the structure of the market here, and see when the trend is actually changing on that level. And then also, again, move it to the demand zone instead of the SR flip zone, because then you're going to have a nicer entry.
I would enter the market in this specific situation. Stop loss would be below the low of the entry candle. For me, at least, you can test this and trade it however you would like to, but for me, and if you're going to use this example when you're testing, that's how you'll want to test it. And your target can be back up at previous resistance or set at a 1-to-1 risk reward, whichever one you prefer. That is going to be the entirety of the trend continuation portion of what I think is the perfect beginner trading strategy. And the reason I think this is perfect is because not only if traded on the correct pairs, if tested correctly and you have the right risk management plan and you do everything correctly in terms of creating an actual trading plan around this strategy, it will not only give you an edge over the market, but it will teach you patience, because we're trading it on a daily chart. We're having to wait at some points days for a trade, which is totally fine as a beginner. Slow down. If you're a beginner, don't be in a hurry to blow your account. If you're a beginner and you don't have
Let's get to the strategy, man,
providing you an edge over the market, you don't need to be in a hurry to keep trading that strategy or to keep trading some strategy you heard from another trader. And don't just go out and trade this one. That's exactly what I mean. If you haven't tested the strategy you heard from another trader that told you you could buy a Lamborghini tomorrow from it, then go test it. See if it actually provides an edge over the market. Make sure you're the decider of where your money goes and not someone else.
I do like the way that this guy thinks, to be fair. I rather like this guy in his teaching style. I just think that this strategy, it is definitely for beginners. I'm just telling you what's a little bit more advanced version here. Use the demand and then look at the structure on the lower time frame. See when the price changes on the actual trend on the lower time frame.
Don't take my word for this strategy. Go out in the markets and test it yourself. It's necessary not only to see if I'm telling the truth, but so you can create a risk management plan, so you can optimize to trade this with the best pairs, so that you can actually see that it provides an edge over the market as well and gain some confidence in the strategy. All of that's important. So doing this on a daily chart, we're going to go to a daily chart now on the pound New Zealand, and I'm going to show you a few examples and give you an idea of how to actually back test this specific type of strategy. Let's just scroll back. I have not even done this yet. I have no idea what this is going to come up with. It may come up as negative. I have no clue. And even if that's the case, it's your job to go through the markets and actually find a ton of situations. You have to have a big sample size. I do at least 100 trades in a back test. So when you do that testing through historical data, hit at least 100 trades.
Yeah, 100 is good.
So here,
25 minimum for a good idea.
At the bottom of this little period of consolidation we had right here. Okay. And if we're looking at this, and remember we're looking for 2 candle pullbacks after an impulsive move. For our pullback, we have this up to this high. We have a pullback of 2 candles here, but nothing broke this high. And until something breaks this high, then the low of our pullback is below that high. The lowest low below this high before the break above it is going to be the low of our pullback. So the way we would draw this out would look something like this.
The one thing I did want to say earlier is when I was describing that I think you can get greedier entries, the one exception I did notice in my experience so far is pound pairs generally don't pull back as far. This is something that you guys can check for yourself, but you'll see that after it does break out here, it actually only does pull back to that SR flip level. So he might make a good point in trading the pound pairs, but I would honestly check that out for yourself, guys, because I know, you know, like things like Euro, the Aussie, things like this, they do pull back much deeper, and I'm not as good with the pound because I am much greedier. In my entries, I like to pull back and wait a lot longer because I want really good reward trades.
Push up, pull back, break and close above what? This previous high. Once we break and close above that high, in order to test this strategy, I would be putting a horizontal line there at the high of the wick. And if we get a market that pulls back like this one here, as we push up, now we pull back to the high of that previous resistance level. This is the area that we're looking at. This is one of the conditions of our strategy. This is the only area we're looking at for trades during the trend continuation portion of the strategy. So we get the pullback, it touches that wick. At this point, what are the two ways we can enter? Either a hammer candlestick or an engulfing candlestick. A hammer candlestick, you can define that how you would like to. I like just using a Fibonacci retracement and pulling it over the entire candle. And if the candle is above a 382 retracement, I consider it a hammer candlestick. This would meet that criteria. Maybe. Yes, this would meet that criteria. This candle here would be my entry candle because it's a hammer candle after hitting the most previous level of resistance in an uptrend. Remember, how are we defining trend? The reason we're in an uptrend is because we have our 1, 2, 3 move. 1, 2, 3 in an uptrend. We pull back to that resistance level, we get a hammer candlestick. At this point is when I would enter the market. So let's go ahead and put a position tool on. The rest of these will go a lot faster. I just want to make sure you really understand this. The close of that candle would be the entry. This is a daily chart. Even if you have a full-time job, you should be able to enter the market here. And remember, don't go out and start trading this. I'm telling you right now, do not go out and randomly start trading this strategy, because what will happen to you is what happens to every trader that does that. You will trade this, you'll lose 3 trades, and you'll go, Steven doesn't know what he's talking about. In reality, I'm a professional trader. Do you know how many times?
I completely agree with this guy. He's a very good teacher. I recommend this guy. This is all the same stuff that I tell you guys time and time again. Don't freaking go ahead and just jump into any strategy until you're really testing it out, and then you know the probability. You need to know the actual probability because you're gonna give up quite quickly once you start losing.
I've lost 3 trades in a row.
I've lost like 10 in a row easily.
Now that I consider to be very good strategies, multiple times. You're not prepared for that if you haven't went out and tested this strategy yourself. You're not prepared for that if you haven't put in the work yourself. Don't sit here and take my word for this. Go out and test it yourself. But in this specific case, we would do an ATR stop. ATR is 140 plus 85, let's say, would be 225.
Y plus 85.
And in this specific case, I would.
This guy's stop doesn't make much sense to me.
We're close enough, 223. I would probably do a 1-to-1 risk reward here, just because my resistance level is so close by that if I did this, it would be a 0.36 risk reward. That's not what I would want. So I would go ahead and do a 1-to-1 risk reward. We're in an uptrend. I consider this market an uptrend. I'm thinking we go higher here anyway, so I would go 1-to-1 risk reward. That would be a win, right? So there we have a winning trade. Let's continue now, and again, it'll speed up a lot now at this point. So after that move, we'll be looking here. Boom, boom, 2 candle pullback. The market breaks and closes above that level. Do we get back down to this level? Here is where patience comes in. A lot of traders go, well, but man, I missed out on this whole move. Missing out on moves is a part of trading. It happens to everybody. You're not going to be able to catch every single big move up that happens in the market. No one can. If I could.
Yeah, I tell you guys for sure, he's completely right about this. I would say about maybe 50% of the trades that I'm waiting to enter don't get filled, and then I'm just kind of left in the dust. About 50%, but that's completely fine because 50% of the trades do get filled, and then of those I win most of them.
Predict exactly what the market was going to do. If I could catch every single big move, I would put 100% of my account on these moves. No one can do that. So don't be scared of missing moves every now and then. That's okay. That happens. And in this case, especially, the most important part of having a trading strategy and a trading plan is following that plan. If your plan says, I'm going to trade only when we get to previous resistance for trend continuation, and the market doesn't get to previous resistance, then you don't trade. Very simple. So in this case, we would have missed this move.
Yeah, follow your rules, whatever they are.
We keep drawing out here. We have the push up. Where's the lowest low from this high before it gets broken and closed above? Looks like it's right here. So this is the lowest low of the pullback. This is how we would draw this out. Push up, pull back, push up. We don't get any kind of entry here. The market continues to pull down. We come into this level of resistance right here. Since we come into that level of resistance right back here, and actually we don't quite hit it. So if you have set in stone rules of the market must come down and hit the high of the previous resistance level, and the market doesn't, what do you think you do? Nothing. You don't trade.
You don't enter, guys.
Traded absolutely nothing, and you have to understand that that's a part of trading. Now let's see.
I like how this guy is just kind of scrolling through, and I trust that he hasn't actually cherry picked this chart because it seems like he's being a little bit surprised by this wasn't even filled. So let's see.
Get a break and close here above this high. We get a break and close on this candle. I know it was a very small break and close, but a break and close nonetheless. We pull this down, and we don't end up getting any kind of entry there. We get another break and close, and here we actually have an entry that ended up being a losing trade. Continuing. Guys, the next trade was actually pretty far away, but right here we have a move down that pushes back up here, pushes back down here, and then we have a break and a close above this previous resistance level.
All right, guys, I'm going to call it here. We basically know what the strategy is, but what I'm going to do is I'm going to just cover what I think is a better version of doing this. You have a couple different options on how you want to do this if you want to be greedier. Now, mind you, I did say something about the pound pairs. They generally pull back less far. So when you're drawing your pullback like this, oh God, it generally will pull back to that horizontal line rather than a deep pullback, right? So in another pair, what I would suggest is look for your supply zones. So if you were to have a drop, because they're all impulsive moves, we want to look for that untested zone, right? We want to look for that last candle before the drop, right? And then we want to look for the retest of that level and not this level here, because that's generally what retail traders do, just because they're a little bit impatient and they're not willing to wait for this supply zone to actually be tested, and then that's generally where it's going to come down to. So a lot of times it's going to hit that and it's going to bounce off, and then it's going to come back and then hit the supply zone and then continue. A lot more often it's going to hit something like that. So what I would then suggest is use that level instead of the SR flip. Unless it's the pound. The pound, you can be a little bit more impatient because it is a much faster moving pair. And then what we're going to do is we're going to zoom in on this reversal here. He said that we see either a hammer or an engulfing candle. So the first things that you can do is I want to zoom in on that, right? And what we want to see is we want to see the market moving up like this, and then the reversal and the breakdown. So if we see a reversal and a breakdown and obvious sweeps above this level, so if you're seeing a hammer like that, most likely it's going to look like something like this on the lower time frame, where you're going to see a sweep above the previous level and then a quick drop, right? That's generally what the hammer is going to look like. If you see something like that and it starts closing below the level that's bringing us out into that liquidity, then this is going to be the good entry, right? Other way around is we just sweep the actual level here above there and then back down really quickly, or we can just make a nice calm reversal and then break down. And once we start breaking down, once again, it's always kind of that level, and it's going to really depend on the momentum shift coming into this move here. But we really want to watch that level there on the lower time frame and then pair it up to a higher time frame, something like this, right? That's going to give you some more confluence just to make sure, because you can still see these down candles, but not see the actual breakdown on the lower time frame. So it could look like something like this, right? It could look like something like this, but on the higher time frame, this candle could line up perfectly to be one solid down candle, or it could be a hammer down candle, and it could just time properly, but you're not actually breaking the levels that are bringing us to those highs. So the actual structure is very, very important here, guys. So that's absolutely everything that I have for you guys. Hopefully that was a little bit better version. I do like the strategy because I think it's great for beginners. I actually agree with him. This is an amazing beginner strategy using structure. This is something that I really do trust, and I would go about this as a very basic strategy for beginners, and you can keep developing on it. What I've basically just done at the end there is I've shown you how I would adjust this strategy. There are much more important things to learn afterwards, like the manipulation and the liquidity pools, and momentum shifts, things like this. But I've given you more of an intermediate version of this beginner strategy that's going to make it even better. And then you guys should be able to make some more money. I think that this strategy, if done correctly, I do believe it would have a slight edge over the market, just based off of what I know from trading. I don't think you're going to make that much money. I do think it's going to need to be refined, and you're probably still going to be messing it up as a beginner, and honestly, you're probably still going to be losing money. But it's definitely a good strategy to go about as a beginner, and I will see you guys next time. If you want to follow me on Instagram, link is in the description. If you want to join the Discord so you can ask questions, talk to friends, things like that, it's also down there. See you guys next time.
Listen.